The worst global recession is here. The worst global recession in recent history is upon us. The COVID-19 pandemic has brought the world to a standstill, with countries around the globe implementing lockdowns and travel restrictions in an attempt to slow the spread of the virus. Let's dive into the video and know more about it. Global economy. These measures have had a devastating impact on the global economy as businesses have been forced to close their doors and lay off workers. The effects of the recession have been felt across all sectors, with industries such as tourism, retail, and hospitality being hit particularly hard. Many small businesses have been forced to shut down permanently, while larger corporations have had to make significant cuts to their workforce. The unemployment rate has soared, with millions of people losing their jobs as a result of the economic downturn. The recession also has had a significant impact on the global financial markets. Stock markets have plummeted, with investors panicked by the uncertain economic outlook. The value of currencies have also fallen as countries struggle to deal with the economic fallout of the pandemic. Worst global recession. The worst global recession has also had a disproportionate impact on vulnerable communities. Lower-income individuals and families have been hit the hardest, as they are often the first to lose their jobs in an economic downturn. The recession also had a major impact on racial and ethnic minorities, who are often overrepresented in industries that have been hit the hardest by the pandemic. The global recession has also had a major impact on international trade. Many countries rely on exports as a key component on their economies, and the recession has led to a significant decline in demand for these products. This has had a knock-on effect on the economies of exporting countries as they struggle to cope with the reduced demand for their goods. The worst global recession is here, and it is having a devastating impact on the global economy. Governments around the world have implemented measures to try to mitigate the damage, such as providing financial assistance to businesses and individuals affected by the downturn. However, the road to recovery will be a long and difficult one, and it is unclear how long it will take for the global economy to fully recover. If global markets are the parameters to use, then that paints a less rosy picture given the confusion and uncertainty experienced by both bulls and bears. Moreover, the world's most renowned economic bodies are advising and warning that an economic collapse is imminent. Even more so as Credit Suisse shares plunged to fresh lows 5 days ago, sparking growing fears and even speculation that the bank could be facing a Lehman Brothers moment. In addition, research and results from some of the world's top business leaders and economists. Increasing rates. Central banks around the world, including the Federal Reserve, have been raising interest rates aggressively in recent months to try to curb excessive inflation. Although this policy was intended to cool the economy, it also increased the risk of a recession. There has been much debate in recent months about whether we will repeat 2008, according to a survey of 400 U.S. CEOs by consulting firm KPMG. About 90% of CEOs believe they now expect a decline. The survey underscores the extraordinarily difficult circumstances in which central banks are battling inflation today. Several historical indicators of global recessions have warned. The global economy is currently in the sharpest post-recession recovery slowdown since the 1970s. Global consumer confidence has fallen far more sharply than in any previous global recession. The world's three largest economies, the United States, China, and the Eurozone, slowed sharply. Under these circumstances, even a moderate global economic downturn next year could plunge it into a recession. This study draws on insights from the past global recessions to analyze recent developments in economic activity and presents a scenario for 2022-2024, a slowdown, like the current one, usually requires counter-cyclical policies to support economic activity. However, the threat of inflation and limited fiscal space are forcing policymakers in many countries to withdraw policy support even as the global economy slows sharply. Roller coaster of GDP. The experiences of the 1970s, the policy response to the 1975 global recession, the ensuing stagflation in the 1982 global recession highlighted the risk that inflation will remain high for a long time while growth is weak. The 1982 global recession coincided with the second lowest growth rate in developing countries in 5 decades, just into 2020. It precipitated more than 40 debt crises and was followed by a decade of lost growth in many developing countries. However, a recession could follow soon. The Federal Reserve is determined to raise interest rates until inflation subsides from very high levels. This can cause the economy to contract and slide into recession. To monitor whether an economic contraction is imminent, we created the recession tracker below. which tracks 15 key indicators. With most signs pointing to the downside, a recession is imminent. The economy grew by 2.9% in the third quarter of 2022. This is a 2.6% increase from the preliminary data released at the end of October. This is good news after GDP fell in the first half of the year despite some improvement in the data. The upward revision of GDP for the third quarter is welcome news, but other details in the GDP report, such as weak real gross domestic product and a marked slowdown in final domestic private purchases, suggests the economy continued to gain momentum in the third quarter, lost, says Bill Adams, CH economist at Comerica Bank. The main index fell 0.8% in October, continuing its recent losses, indicating the economy is slowing. This worrying development is one of the best indications that the economy could head into a recession early next year. So that was all for today. Hope you liked the video.